Donald Trump's economic strategies during his tenure as president sparked a wide range of reactions from financial markets, economists, and investors. His approach to taxes, tariffs, deregulation, and trade deals reshaped key elements of U.S. economic policy and had a substantial impact on Wall Street. As his economic plans continue to influence the market in 2025, it's important to assess how investors, analysts, and financial experts have responded to his policies. This video highlights the top 10 reactions from Wall Street to Trump's economic strategy, focusing on the implications for markets, businesses, and the broader economy. 1. Positive sentiment on tax cuts. One of the most significant aspects of Trump's economic strategy was his push for tax cuts, particularly the reduction in corporate tax rates. Wall Street generally viewed these cuts positively, as they were seen as a boost to corporate profits and an incentive for investment. Major stock indices saw gains following the announcement of tax cuts, and analysts anticipated that businesses would use the savings to expand operations and increase shareholder returns. However, some were concerned about the long-term impact on the federal deficit and national debt. 2. Mixed reactions to trade wars. Trump's aggressive trade policies, particularly with China, prompted mixed reactions on Wall Street. While some investors appreciated the protectionist stance and believed that it would benefit U.S. industries, others feared the potential for a prolonged trade war that could disrupt global supply chains and increase prices for consumers. The tariffs imposed by Trump raised the cost of imports, particularly in industries like electronics and agriculture, causing volatility in the markets and creating uncertainty about the future of global trade relations. 3. Regulatory rollback sparks optimism. Another key element of Trump's economic strategy was the rollback of various regulations, particularly those related to the financial, energy, and environmental sectors. Wall Street reacted positively to these moves, as deregulation was viewed as a way to reduce compliance costs and make it easier for businesses to operate. The repeal of certain financial regulations, for example, was seen as a boost for banks and financial institutions, increasing their ability to lend and invest in more profitable ventures. 4. Concerns over rising national debt. Despite the optimism surrounding tax cuts and deregulation, Wall Street also expressed concerns about the long-term consequences of Trump's economic strategy on the national debt. Critics argued that tax cuts, combined with increased government spending, would lead to an unsustainable rise in the national deficit. The concern was that high debt levels could lead to higher interest rates and inflation, which could negatively affect market stability and reduce the government's ability to respond to future economic crises. 5. Volatility in the stock market. Trump's economic policies were often associated with significant market volatility. His use of Twitter to make policy announcements and his unpredictable approach to international relations created an atmosphere of uncertainty on Wall Street. While certain policies like tax cuts and deregulation were initially met with optimism, unexpected policy changes or trade tensions caused sudden fluctuations in stock prices. Investors were forced to adjust to the unpredictable nature of Trump's leadership, leading to a more reactive, rather than proactive, approach to market investing. 6. Increased investment in domestic manufacturing. Trump's focus on revitalizing U.S. manufacturing through tariffs and incentives for domestic production led to a positive response from investors in certain sectors. Wall Street saw potential for growth in industries such as steel, automotive, and technology, which were targeted for protection under Trump's policies. Companies in these sectors anticipated higher demand for their products, as tariffs on foreign goods made U.S.-made products more competitive. The push for American-made products was particularly beneficial for industries reliant on U.S. production. 7. Doubts over trade deals and global growth. Although Trump's trade policies aimed to bring more favorable deals to the U.S., Wall Street expressed concerns about the broader impact on global economic growth. Analysts feared that protectionist measures could lead to retaliatory tariffs from other nations, which could undermine international trade and economic cooperation. Trump's decision to withdraw from trade agreements such as the Trans-Pacific Partnership (TPP) and renegotiate NAFTA, resulting in the USMCA, left many on Wall Street uncertain about the future of global trade relationships and their potential to foster long-term economic stability. 8. Support for energy and infrastructure sectors. Trump's push for energy independence and infrastructure investment was met with positive reactions from Wall Street, especially in the energy and construction sectors. The administration's pro-oil stance and commitment to expanding domestic energy production, such as fracking and offshore drilling, were seen as beneficial for energy companies. Meanwhile, the proposed infrastructure bill, which aimed to modernize the country's roads, bridges, and utilities, sparked optimism in construction and materials stocks. Investors anticipated that these sectors would experience a surge in demand, leading to long-term growth opportunities. 9. Concerns about income inequality. While Trump's policies were generally favorable to businesses, there were concerns on Wall Street about the broader social and economic impact of his economic strategy, particularly in terms of income inequality. Critics argued that the tax cuts disproportionately benefited the wealthy and large corporations, while leaving lower and middle-income Americans with limited benefits. On Wall Street, some investors worried that a widening income gap could lead to social unrest and decreased consumer spending, which would ultimately undermine long-term economic stability. 10. Long-term uncertainty and investor caution. Despite the immediate positive reactions to Trump's economic strategy, Wall Street remained cautious in the long run. The unpredictability of his policies, especially on trade and foreign relations, created an atmosphere of uncertainty for investors. The lack of clarity about future economic priorities, combined with rising debt levels and the possibility of geopolitical tensions, led many to adopt a wait-and-see approach to their investments. As a result, some investors sought safer assets, such as bonds and gold, in anticipation of potential economic instability. Trump's economic strategy has had a significant and complex impact on Wall Street. While many of his policies, such as tax cuts, deregulation, and infrastructure investment, were welcomed by financial markets, they also sparked concerns about long-term sustainability, national debt, and global economic relations. The combination of volatility, uncertainty, and potential growth opportunities created a mixed landscape for investors. Ultimately, Trump's economic strategy has left an indelible mark on Wall Street, with reactions ranging from optimism about domestic growth to caution about the broader implications for global trade and market stability. As his policies continue to unfold in 2025, it will be interesting to see how Wall Street continues to react to the evolving economic landscape.